I have been in this field of banking and tech on almost for 2 decades. Maninder have worked with, uh, started working with Kotak Mahindra Bank and then have worked with Yes Deutsche for a long time, and in between, for a couple of the tech companies. My last role was heading strategy for one of the fintechs, which creates platform for lending, in Pune. And during that is what I realized that there are so many white spaces that exist in the finance and lending ecosystem in India. And then what is it that we could do for that? And that is where now I have started building my own startup, which is very specifically focused towards working capital loans for small and micro manufacturers. We call it QistonPe, but that's what I do now. Yeah, so that's brief about.
Yeah, yeah. No, no, thank you. Thanks a lot. And your experience says it all that you are the right person to cover this topic. And so let's pick from where you just finished about your startup and what problem you are trying to solve. So the
Mhm.
credit landscape in MSME is a very interesting and very challenging space. So if you can help us understand how this space looks like, what does it mean? And what is happening in this credit space primarily related to
Mhm.
MSME sector. So yeah.
Sure. So as we all know, I mean, I think it's pretty much out open, and a lot of people have spoken about that how important MSME sector as such in India has been from two aspects. One, MSME itself contributes upwards of 50 to 60% from a GDP perspective.
Mm.
Uh, I think, and there's a lot more employment generation than these MSMEs do. However, traditionally, if you see, the credit has always been a very sort of challenging topic for them.
Mm.
And there are multiple reasons for that. I mean, if you just look back a little, if you see how the banking would have started or has started, is always the banks and NBFCs when these guys started, they were all the first customers that they kind of looked at was large corporates, right?
Okay.
And but large they started servicing large corporates, and large corporates are typically less risky. Plus, they are generally centered around your metros and urban areas more like tier one cities, right? Whereas if you see MSMEs are largely spread across the country, as well as they are more present, even more present in semi-urban and rural kind of areas. So that's the reason if you see the penetration of credit or even for that matter banking services has been very, very limited. Of course, subsequently, when digital channels came up, obviously the other financial services, which typically include savings account, current accounts, have reached even to the MSMEs. But the credit, which is essentially a risky product in that sense from a bank's perspective, right, or NBFC's perspective, it needed a very different approach, and that approach, as such, has been still missing. And that's the reason all these MSME credit penetration so far has been very less, and naturally that they have always relied on more of an informal credit for many number of years. Now, even from banks and NBFC's perspective, what has happened is one, I spoke about the geographical reach that these guys didn't have, right? Subsequently, they had a larger customer segment to address, which was the retail customers who are typically salaried, which is again less risky. So again, if you see the credit penetration happened there to a large extent to fuel consumption, to buy assets and all of that. But MSMEs typically, you know, did not have the credit history that's needed for you to underwrite them,
Mm.
right? So far, that was missing. A lot of MSMEs did not really had any documentation around, how much business are they really doing, and even if there is a documentation, it was very difficult to verify it in the olden days, right? Plus, if you see before the demonetization and before the UPI success,
Mm.
India was largely a cash economy, so very difficult to verify the cash transactions that are happening there. Okay,
Right.
so I think all of these challenges, is where these MSMEs actually had very lack of credit, so to say, and none of the formal players like banks and NBFCs were sort of constrained. I would not say they're not willing, but constrained to sort of extend the credit. Now the scene is changing, but having said that, the MSME space itself is so big that it will take some time to cover, and very specific products are, in my view, are needed to sort of address this segment.
Okay. So So is it right to assume that still the informal credit channels are primarily contributing to the credit for MSMEs?
So a large at various places now, what happens is when we spoke of MSME as a segment. Now it covers multiple different segments within. Okay, if I broadly talk about on the distribution side or a channel side, distributors, smaller distributors and retailers could become one segment,
Okay.
right? Whereas if you look at a supply side, which are typically the manufacturers which supply to large OEMs or vendors which are supplying to large OEMs, right? Those vendors, and then there are deep tier vendors, like if you look at a specific supply chain. Now, as you go down deeper on both the supply chain sides, right, where these MSMEs typically sort of operate, some of the segments are getting addressed now. There has been huge progress. There have been various new products that the banks, NBFCs have come up with. The fintechs are playing a huge role there. But having said that, the segment is so big, and what strategies have worked for some of certain segments are probably not working even today for some of the specific other segments, which are more sort of at a larger degree of separation from a large OEM or a large corporate.
Okay.
So those spaces, in my view, are still open, where we would see credit penetration, formal credit penetration happening
Hmm.
for the right products, right? But having said that, there is enough space and enough, in fact, a large opportunity still untapped, and a large credit gap still exists. Okay.
Okay. Okay. So generally, what are the interest rates for these like formal channels and informal channels? Like generally average, if we have to take.
So So informal channels anywhere range between 24 to 36 plus, which is kind of very, I would say, usurious in a sense. So a very high rate of interest that exists, right? Uh, Usurious to even a sense that probably even in Vedas it was said that these are very high interest rates. So that we still operate in, from an informal credit perspective. But see, a lot of times MSMEs do have to resort to such informal channels. So that is the average. With respect to when it comes to formal ranges, depending upon the segment, depending upon the type of product, anywhere between 12 to 24 or slightly higher than that. But it's generally, I wouldn't say it anything more than 24. Plus, in the formal segment, what happens is if there is a collateral, obviously your rates come down. In which segment are you operating? Which product are you buying? Are other using? So that defines that, but largely the range, in my view, would remain from 12 to 24 kind of a range in the formal segment.
Okay. Okay. Um, just to clarify it a bit more, so formal channels are basically the traditional banks and NBFCs and the new age fintechs companies, or there is anything else also
Yes.
in formal channels?
But no, formal channels consist, as you rightly said, banks, NBFCs, and even the new age fintechs, right?
Okay.
And informal is, anyways, traditional. Your maybe relatives, some
Okay.
syndicates operating, which are not registered or
Hmm.
not legally allowed to kind of lend. But yeah, those are the informal channels that exist, and quite a few MSMEs have to heavily rely on these channels, informal channels, to sort of
Hmm.
bridge the credit gap that they have.
Hmm. Okay. So, so, so countries like China, so, so the, so this challenge, what we currently have or we are trying to solve. So, is it right to consider that China has solved this challenge largely, which has further given a boost to their manufacturing sector? Is that right?
So, in one sense, Maninder, I would put it that yes, it is right, because if you see the Chinese financial industry, unlike India, it is largely state controlled, right? So the banks, the bigger banks that the China has, are largely state controlled banks, right? So government from their side could really push, the credit to manufacturing, and that process started around long back, about I think around 90s, late 90s, or around thousands, where China actually started focusing a lot more around the manufacturing side. So the evolution has been there, and once you start creating an ecosystem and a of formal push towards making the credit available, because all the manufacturing typically would need credit. Credit plays a role of an oil, from an ecosystem or a supply chain perspective, right? So from that perspective, yes, the challenge is solved to a larger extent, because the credit penetration in China towards MSMEs are higher than what we see in India, right?
Mm.
Uh, but yeah, of course, but because there is a state-run financial institutions, there are other challenges that the China has, which probably is out of the context for today's topic
Right.
that we have here. But I would say there are other challenges with respect to a
Mm.
state-controlled financial institution, sort of the kind of credit that they probably have given.
Okay, okay. No, no, thanks. So, um, so at the end of the day, so all these challenges uh, are leading to some kind of impact on the supply chain, right?
Absolutely.
So, so if we have to categorize the challenges, like how these critical issues are impacting the supply chains in these manner or these ways,
Mhm.
so what would that be, according to you?
So, let's start. I mean, if you look at supply chain, I generally put a large OEM or a brand in
Mm.
the center, right?
Okay.
Let's say if you look at Maruti for that matter, but maybe let's take some other example wherein I'm able to talk about, say, retailer. So take an HUL in from that sense, right? It's a large brand, right?
Yeah.
Now, HUL's channel side basically includes stockists, distributors, and then sub-distributors and retailers, right? Now, let's say the retailer lacks credit, okay, in the traditional sense. Now, what happens is the retailer is unable to stock as many products or as many varieties that the retailer would want to actually stock, because
Mm.
doesn't have the working capital for
Mm.
that, or from a capex perspective, let's say unable to expand his shop space, right? So
Mm.
he's constrained. Now, that constraint today, in a traditional way, would have gone back to the distributor, because
Mm.
the retailer is purchasing from the distributor, but there is a limited, credit days that are available. The distributor wants to expand, unable to expand because again the receivables would have built up, or the money is tied
Mm.
up in the current business. There are, the receivables that are pending with the retailers, right? So the expansion becomes challenging. And same story goes even to the brand, right? So
Mm.
what happens is if I talk about channel specifically, the growth of the brand or the sale of the products are restricted because the unavailability of, the credit part, right?
Mm.
So
Okay.
that and the other portion is, so one is this part, the growth that gets limited. The other portion is the business cycles for MSMEs are different. So in few months the sales would be higher, few months sales will be lower,
Mm.
right?
Mm.
That impacts their repayment capability to distributors, right? So if within say a span of 15 to 20 days or an agreed credit cycle, the distributor may not supply more goods to them, right? So naturally the billing to the stockist and naturally the billing to the OEM sort of goes down, right? So there's a lot of variability from a supply chain perspective. So a predictability of how much should be produced, how much would actually
Right.
get consumed, goes down due to lack of the credit that. So that's the same challenge if you can replicate from a even from a supply perspective, right? So HUL might be purchasing a lot of raw material from the vendors. Now, HUL does not have a visibility around how much to produce, how much inventory levels to sort of keep.
Mm.
The same challenge would be that variability goes to the vendors, that
Okay.
there is no predictability in terms of what to sort of produce, how much to supply.
Mm.
So that makes the whole supply chain sort of unstable in that sense, in my opinion,
Mm.
right? These are the few challenges that happens. Secondly, if I more look towards the supplier side or vendor side, uh, the larger, if there is no credit available, and let's say there's a large order that comes,
Right.
when the brand itself does not have the visibility whether the vendor would be able to produce so much and sort of give it to us so that we are able to further process it and make it in actual goods, right? And the vendor might have to rely on subsequent smaller vendors, right? So
Mm.
the whole predictability from a supply chain perspective goes for a toss. At times, the quality might get impacted because of which, and the overall supply chain, stability sort of goes down. So those are the challenges that I see due to lack of credit.
Right. Being a part of supply chain currently, so whatever you have shared, I can relate to it because we do discuss majority of the discussions with the suppliers, specifically in this current period where lots of MSME suppliers are struggling. So they do share with us that actually what is happening, like because of this credit issue, when they come to us, they discuss about payment terms, why an early payment might help them, and what they will be able to solve for us. So yes,
Mhm.
so you have rightly covered that part, but just to help everyone understand more about it, so there is a concept called credit line, right? Uh,
Mhm. Yes.
Many suppliers, when they meet us, they say that we have multiple credit lines, so you don't have to worry. Specifically when they are new, like we
Mhm.
start working with them. So if you can simply explain what does it mean?
Yeah. So basically, if there is someone says that there is a credit line that's available to them from a bank largely, so it would be a cash credit limit or a overdraft limit that's on top of their current accounts, which will be extended by the bank. Now, how typically it works is that it is like the customer can actually withdraw the amount that's needed to sort of run the business. Typically, the credit lines are extended towards working capital, and those, whatever number of days you utilize and how much funds you utilize, basically that much interest is charged. And
Okay.
then, once the credit line is replenished, I mean, you repay to the bank in the same account, the interest portion goes down, right? And the limits are sort of restored, right? So that is how a typical
Mm,
product works. Having said that, these generally, in maximum cases, these ODs are actually secured either with an FD or a collateral, largely. So those players who are able to offer a collateral or an FD
mm.
to the bank largely get the credit lines. That is how it's been operating so
But this is also like help as a product helping them to, do expansion and resolve their challenges, right? If anyone has this collateral or FTs or like what you mentioned.
So absolutely. So let's say if there are these, MSMEs which are able to offer collateral, then largely these problems are solved. But typically, also what happens is that when you have a collateral, that collateral at a lot of times goes towards a capex. Okay. So MSMEs typically would need, in my mind, two sort of credit products. One is for an capex where there is an either an expansion to buy a shop, to a retail space, or to buy a machinery, right? That typically goes under capex, right? So either your machine itself acts as a collateral, or the space that you're purchasing acts as a collateral, right?
Mhm.
So that goes more towards capex. But your routine business operation itself needs some amount of funding, which we typically call as working capital. Now, there, if you are already have your all your assets sort of collateralized for capex perspective, your opex the funding gets restricted, and a large part of your credit gap today also exists from a working capital perspective.
Hmm. Right. So actually adding or even extending it further, the challenges which you mentioned for FMCG sector, I think it's a very good sector to discuss
Mhm.
this topic. So the credit line you explained. Now, maybe how this new age fintech startups or even established ones who are now established, the products they are giving kind of or trying to solve the challenges which you shared from the different angles like channels or the supplier side. Um, and in that space, I just wanted to understand like this BNPL product, like buy now, pay later. Is it something which is applicable to this section, or it is very retail focused, or people like us, customers, direct customers, where the efficiency of this product is better than using it in the supplier or MSME space?
Absolutely. So I think how BNPL works for a consumer like us, it is a very, very similar way that it works for MSME as well, right? So as a consumer,
Okay.
what we do is we essentially want to go and buy a product, let's say a phone,
Okay.
which is worth say 50,000, right? So you actually go and say it's buy now, pay later, and you basically say you can choose that within you can pay it in three installments or six installments. Essentially, you're paying later, and
Right.
at times these are no interest schemes because the interest is not charged to the customer, but the brand sort of subvents that interest, right? So that in order to boost the product, boost the sales of the product, right? So that is how essentially it works. A very similar concept is what we call as B2B PNPL, which is now working quite efficiently in the MSME space, especially towards distribution.
Okay.
The channel side of it, where where the retailers are there, right? So here, how basically it works is, let's say I'm a brand, right, and I supply to the distributor, and the distributor sort of supplies to the retailers, correct? The first step that was sort of done was to solve for the distributor essentially.
Mm.
So typically, when the brand supplies to the distributor, there's a sales invoice that gets generated,
Mm.
correct? Now that's where the fintechs or banks sort of come into picture. And what they've done is they've one essentially built the whole platform so that they manage the sales invoice flow,
Okay.
right? And they have underwritten the distributor. Okay. Now
Okay.
what happens is the moment sales invoice is raised, typical, in a traditional sense, there might have been a credit period that the brand provides, say between 15 days to 45 days, post which the distributor can make payment towards the goods that have been purchased, right?
Okay.
That used to create a cash flow gap for the OEM because there's a lot more receivables that are getting done. Now today, with these fintechs sort of coming into picture, what they do is they discount this sales invoice, right?
Okay.
So
Yeah.
what used to happen, earlier days, the distributor would have paid to a brand after say 30 to 45 days period of time, right? Instead, now today that gets discounted. The sales invoice gets discounted. The brand gets payment in a immediate fashion or a T+1 fashion, right? Helps the brand to manage the cash flows better. And now the same solution can also be replicated between a distributor and a retailer as well, right?
Okay.
So a lot of players have now reached out to the retailers as well in order to sort of ensure that the sales invoice or their from a retailer perspective, the purchase invoice gets discounted and the money goes to the distributor, right? So this actually solves such product that yes, it gives you the credit. The credit is given to the MSME,
Mm.
but also largely solves the problem for distributors and the brands. Their cash flows problems are getting solved. Okay, and also helps the retailer because at times what happens is the retailer can purchase more, stock more, and thus sell
Mm.
more. Right? So this product is sort of, I would say, parallel to the retail BNPL that we see.
Mm.
However, having said that, here it is not a pay in three or pay in four kind of a installments, but
Mm.
the credit periods can be extended. Let me explain. So now normally, let's say between a distributor and retailer, the distributor might have offered a 15-day credit period to the retailer, right? So retailer has to pay back in 15 days. Now, within that 15 days, the retailer may face cash flow problem that enough sales have not happened or some other payments are due like salaries or tax or GST and all of that, right? So unable to pay back in 15 days. Now that creates a problem for distributors. But with such solutions, we know which essentially discount the invoice that is raised by distributors. What happens is distributors' cash flow is taken care of. The retailer may say instead of 15 days, make it a 30-day product. So
Mm.
15 days interest is borne by the distributor. The remaining 15 days interest is borne by the retailer, right? So it gives the flexibility within that supply chain, and help the overall supply chain. So that B2B BNPL product
Mm.
has been extended by various players and largely towards the distribution side of it.
Right. So what I understand is it's actually very established. Like it's not that
Right.
how on the retail side it is like lots of people use it, the consumers. In the distribution side, for example, you took an example, it is very well established, everything is in place, and it's not something which is very new, right?
So last 2, 3 years, there are various fintechs and I can take two names like Finag, ProcCap, Extra Capital, Extra Cap. So these players have come up in last, about 3 to 4 years, and that's where these products have got sort of, established. But they're largely, I mean, if you see there now where this product works, so this largely been done in the industries such as FMCG, FMCG, etc. They are done, but there are various segments within the industry where I think this still can be done. Okay, hardware, building, construction materials. In some of these industries, probably still there is a huge gap that exists, and this product should actually work well, right? So, a lot of players, a lot of retailers that we interact on a day-to-day basis have this solution. A lot of industry segments probably are yet to get, but there are fintechs which are working towards it, and they should get this product soon.
Okay, okay. So buy now, pay later products are well established, what you just explained. Like you mentioned that the fintech space is evolving, lots of things are happening. You are all also working in the same space, trying to solve the challenges this space has. So, what is happening in this space in terms of when you said evolving? So, maybe you can elaborate a bit
Sure.
how it is helping MSMEs overall.
Right. So see, Maninder, we spoke about the challenges in terms of why the credit was so underpenetrated from an MSME perspective, right? One of the challenges that we had spoken about was specifically the geographical reach that those banks or NBFCs traditionally had, right? Other one was where there was lack of data, lack of data from the perspective of, transactions that are happening, the real worthiness of from
Mm,
a credit worthiness from an MSME perspective. The third challenge that I actually foresaw was that, the right product availability,
mm,
for MSMEs, because a typical traditional term loan, may not be helpful for MSMEs, right?
mm,
So these were largely in my mind three challenges, and then the fourth challenge, which essentially also serves all of this, is a solid technology platform that's needed
mm,
for them to operate the new or different products that are now created for MSME, right? So these are the three or four challenges which existed in that. So
mm,
now what has happened is, let me talk about why there were challenges earlier and now how they are getting solved, right? So one of the things that has happened, which has really been helpful, one, a lot more digital data nowadays is available. So if you really look at, there has been a implementation of GST. So now we actually know that what purchases that an MSMEs are doing, right? And if the MSMEs also serve in a B2B manner, how much is the sales rate? So today you have a handoff, a supply, from a purchase side and a sales side using GST. Invoices are also now digitized, and there is an e-invoicing mandate that has
mm,
happened. So if you're someone who is having a turnover of greater than 5 CR, and I think now it is getting reduced to 1 CR as well, has to generate an invoice. So you can actually also verify the invoice, right? So sales data, purchase data, both are digitized. Even from a retailer standpoint or a channel side perspective, due to UPI, a lot more sale today is verifiable that the sales are actually happening, which in the previous times it was possible, right? So this has happened. In addition to that, the overall supply chain also, there is a lot more digitization that has happened, right? So I'll speak about maybe GEM portal, government e-marketplace, which
okay.
acts more on the supply side. So all your large PSUs now have to essentially put a tender on GEM, and the reverse bidding happens, and you are able to get the tender, right? So there is a verifiability that has come up from an order book perspective. Similarly, platforms which are sort of digitizing or aggregating the manufacturers, right?
Mm,
Or from a supplier side, or similarly, you can look at Jumbotail or Udan, which are on the channel side. Again, the B2B e-commerce platform. So they are also creating a data around transactions, around the purchases or sales of
Mm,
from MSMEs. Now, all of this essentially was lacking a few years ago. Now,
mm,
all this data today becomes available. So, how that changes our underwriting is now very different. Earlier, banks or NBFCs would have typically relied on a static data like a
mm,
P&L and balance sheet, and a lot of items around that would have been not verifiable in that sense, right?
mm,
So those were the only two things. So that's where the collateral used to be very important. That if there
mm,
is a collateral, I know, or the banks know that, or NBFC knows that there is a security that's available, right? But now with the data that's today getting generated,
mm,
underwriting can be done, in a more dynamic manner, more which is dependent upon the cash flow
mm,
that they actually see, the cash flow that's verifiable, which tells them more about the business cycle. So the product that also can be created today is very different. So it could be very tailored to a specific industry segment, depending upon what's the cash flow gap that they see, and then it could be uh, the product could be created, could be monitored over a time. Now that also creates a credit history generation for MSME,
mm,
right? So which will help them now offer more products, right? So this is the space, that is how it has evolved. Now, what the fintechs are doing in this is largely the distribution gap was existing, which these fintechs are now basically have come up and tried to create a distribution on the behalf of banks and NBFCs.
mm,
They brought in the new technology, basis which now a lot more supply chain finance related product, which is it's essentially a purchase invoice discounting or sales invoice discounting, can be done, and the tech there supports customization of these products. So, like a typical FMCG cycle would probably be around 7 to 15 days,
mm,
versus on a distribution side versus a building construction material or hardware space or a pipe space could vary from between 45 to 60 days. Now, you need a tech product which can essentially do all of this, manage the repayments, interest calculations, etc., the subventions that are coming from that. Now, all this tech platform or tech layer was also missing from a bank and NBFC perspective, right? So that is where these fintechs have started playing a huge role. So create a distribution channel, create very specific products that suits the MSME needs today, and third, offer a tech platform using which the banks and NBFC can actually start deploying funds, right? So from that perspective, in my mind, the fintechs have been playing a very, very important role
mm.
now to ensure that the credit gets penetrated in the MSME space.
Right. Are fintech startups facing any issue in terms of adoption also, specifically um, from small companies? I would be very specific, like micro companies. For from the MSME space, like 95% plus are like micro only.
Yeah.
And what we know, or at least from my experience, like adoption of new things, even if they are going to solve such some issues, there is always some hesitance whether it will work or not, and it is related to money or credit. So, so do fintech startups face this issue also from the consumer point of view?
Absolutely, what you're saying is absolutely right. So any new thing, and specifically when it revolves around money and a trust factor, right? There is a hesitation. There are very few early adopters, but luckily due to other areas such as UPI and now mobile banking or
Mm,
UPI apps, there is some trust that has gotten up there around the technology itself. But having said that, there have been some frauds which have specifically happened around the consumer side of it, where there have been unauthorized apps, lending, and there has been
mm,
challenges around the recovery part. So that really creates a challenge with respect to new adoptions.
mm,
Okay. Plus, if I speak more about the distribution side or the channel side of supply chain, what happens is uh, today the retailer or they buy more from the distributor. Now, while the distributor offers a credit period of say 15 days, there's always a way that the retailer can stretch it a bit, saying I will, instead of 15 days they can pay up to 20 days or so, right, and without affecting the credit history. But as soon as a formal sort of credit products come into picture, uh, after 15 days, if you don't pay, it starts affecting our credit history, right? And that is where that problem of adoption starts coming in because, see, we have to also look at, in this sense, the models which today are used, and I'm specifically talking about more of a supply chain finance at this moment
Right.
and not touching the capex part of it or the term loan part of it, right? These products, the model that has evolved is what we call it typically an anchor-led supply chain finance,
Okay.
right? So essentially, what happens is these fintechs or NBFCs that do a tie-up with a large anchor, uh, and then that large basically anchors tries to drive the adoption, right?
Okay.
Now, if you look at the supply chain, let's say, if I'm an HUL and I'm trying to run a channel finance kind of a program for my distributors and retailers, right? Uh, Now that retailer may be selling HUL products, about say 20% of his overall portfolio,
Hmm.
correct? But when these fintechs run anchor-led supply chain finance problem, from a retailer perspective, yes, we need finance. It is a good thing, right? But you're only solving my 20% of the problem.
Hmm.
Okay.
Okay.
You may not be solving a 100% of the problem. So while it has started helping, while it has started creating the history as we spoke about, and solving these challenges, there is also inherent a problem that, okay, one, I might, even if I delay by a day or so, there is a challenge with respect to credit history. Uh, Even so that is the first problem. And despite the retailer doing so and signing up for the program, you are not solving a full need, right?
Hmm.
So what we've realized is that as you go deeper in the supply chain, okay, like at a distributor level, the wallet share of HL may be 50% or 40%, so bigger problem is solved. As you go downstream, more downstream towards the a retailer, uh, small percentage of the problem of that retailer is solved, right? It could be 10%, it could be 8%. Now that has been the challenge even with these anchor-led supply chain models, which has become a very, very prevalent. And a similar thing also happens around the upstream, where in the supplier side. So now here I'll take a little different example. Let's say, an anchor-led supply vendor finance sort of a product, which talks about, let's say, a Bajaj ecosystem. So some large tier one manufacturing supplying to Bajaj, Bajaj Auto, right? They might be reliant 50-60% around on Bajaj, right? So that problem is solved. But that Bajaj tier one supplier also sources certain things from, a smaller tier two, tier three manufacturers. Now, here it's very difficult to reach to these, smaller manufacturers
Hmm.
purely in a anchor-led supply chain finance kind of a model, right? So there again, once you start reaching there, what happens is their reliance on a Bajaj, one, the visibility of that supply chain is a problem. Secondly, the problem that you will solve for Bajaj as a tier three, tier four vendor, because the reliability or the dependence on Bajaj is like maybe 10-20% or so, correct? Now, you are again not solving the full problem. So while these fintechs so far have done great work, from a enabling the credit perspective, uh, the models that are currently available may not have solved 100% of the problem, and that is why we still see the gap which is there.
Right. And I think this is very important, like what you are covering on a ground level, what actually happens. Um, from the government perspective, or even if I say from RBI point of view, um, we see lots of schemes primarily from the government side coming regularly to support the ecosystem in whatever way possible. However, the problems like what you are covering today are still there. Like there has been some
Correct.
improvement, like you mentioned about GST and
Hmm.
the digitization, what is happening, the initiatives which government is taking to improve the ecosystem. Uh, like the case where you mentioned that even with anchor-led supply chain financing or the what fintechs are trying to resolve, still it is very difficult in certain cases. So the fintech startups, then even the formal banks who are improving the system with more credit, how the government or even institutions like RBI helping these organizations to make this better and better every day? Like, do you feel that the programs they are running are helping them to further help organize the space, or there is still some integration required that because of which the gaps are still there, which needs to be resolved?
So I think, Maninder, what you touched upon from a government and RBI perspective, let's speak about in the initiatives that have been run so far, right? So if you look at from a government perspective, we already touched upon GST implementation, e-invoicing, right? The GEM portal, which
Right,
have started creating a lot of data. So that has been a one of the great changes that have
right,
today at least made it possible for the formal credit to reach the micro, even nano, micro, or small, enterprises in India, right? Even UPI for that matter. So all this digitization actually is going to help a lot and has been helping, right? So all the new models, even, today you have the verifiability of the data,
mm,
is what is ensuring that the credit penetration happens, right? So the whole DPI or digital public infrastructure that India has created and for which now, even the world looks up to India from a, what sort of a tech infra or public good that needs to be created. So that has really been helpful. Absolutely. When it comes to RBI or even government, if I speak about MSME more from a government perspective, the emergency credit scheme or credit guarantee scheme has actually created a boost, and has also taken some risk away from the banks or NBFCs,
right,
which were hesitant to lend to MSME sector because there is a government backing that's available, which ensures that your portfolio is sort of secured to a certain extent from an NPA perspective, or so that has actually created a boost, and that solves definitely helps us solve certain problems which are related from a risk perspective, from a data perspective, right? When it comes to RBI, again, a lot more push or a lot more specific schemes and in ensuring that the MSME now, lending is now a part of the priority sector lending, which essentially makes it sort of a compulsory for banks to lend to, MSME, opens up a large capital pool that's available to be lent to the MSME part, right?
mm,
So that these initiatives have definitely been helpful. These are the initiatives which will eventually, help India as an overall, once we start, once, from a growth perspective as well, right? So that is absolutely spot on and something the work that has been, is done is really applaudable, right? Having said that, there are certain challenges which still needs to be addressed. Because what happens is one, these challenges are more, I would say, even with respect to the system itself, right? So these schemes by run by government and RBI doesn't solve for the specific product that needs to be created, doesn't solve for the distribution uh, challenges that the banks and NBFCs face. And in addition to that, there are certain other areas where I would like to touch upon more from a perspective of how this system works. So capital pool is available with them, right? But the
okay,
ground reach might be available with, a lot more with NBFCs. Okay.
okay,
But while RBI has enabled co-lending to happen, okay, there is challenge because co-lending partnerships don't happen. It's difficult to get co-lending arrangement going off the ground, and if unless you are a really double A rated NBFC,
mm,
getting a co-lending arrangement from the banks is very difficult because even how NBFCs are able to source their capital today is the banks actually lend to NBFCs, and NBFCs then further lend it down to the actual end customer, right? Either via fintech or on their own, right? But for NBFCs to get that sort of a funding, they have to be really highly rated.
okay,
Now, even if there are good NBFCs which are, double B rated or so, or they are probably very new age NBFCs, but have a good portfolio that is run over last 4 to 5 years with minimal NPAs. I think it's difficult for them to even secure a good amount of funding or get into a collateral and co-lending kind of an arrangement with the,
mm,
the banks. Now that is still creating a constraint around how the capital flow to the MSME would happen, right?
mm,
And a typical new age fintech essentially is reliant on an NBFC or a bank in order to sort of, start lending around this product, right? So these are some of the challenges where I feel, it's creating that constraint. Another thing that kind of creates a constraint is a lot more. And see, what happened. I'm saying the regulator has done a fantastic job because there was a lot more unsecured lending that was happening in last few years, right?
Right.
But an unsecured lending that's happening towards consumer, which is fueled more by consumption, more towards consumption or buying new products, is very different from an unsecured lending that has to happen from a MSME, from a supply chain finance perspective, right? So today, I think there is some amount of merging of both unsecured lendings that is happening, and where there is a gap that's created, okay, that banks and NBFCs shy away from an unsecured lending.
Mm.
Having said that, I think there is a difference in two products, right? One that goes for a supply chain or goes for a specific end usage, right? So these are some of the challenges that we feel from a system perspective are still to be yet to be solved. Yeah.
Okay. So largely, I think um, the positives are higher than um,
Yes.
the challenges in terms of how the government or the institutions like RBI are supporting the ecosystem. So I think that is
Right.
important. Like challenges will
Yeah.
always be there, but the push
Right.
should be positive overall. Okay. I think I'll come to the last part of our discussion.
Sure.
Um, so, for example, um, I want to start a business. I don't have any credit history. Uh, First generation entrepreneurship idea, but it is not a new idea. It's like a traditional idea. Like I want to set up a machine shop, want to buy few machines worth not even 1 crore, I would say, maybe less than 1 crore, and then start doing the business. And I don't have much in terms of collateral or FDs, like I'm only 24, 25 years old or something on those lines.
Mhm.
Um, so what what should I expect in terms of when I'll reach out to formal or informal channels? Um, in terms of the challenges, like I will reach out to these banks or informal channels, and this is what they will ask me, or this is what will happen, and how should I prepare myself to ensure that I secure the required credit and I can start my business. So kind of a case if we
Yeah.
can solve it. You can change it. I was thinking more on the supplier side, but if you want to take it from the distribution side, so you can take that case as well.
Okay. No, I think that's perfect. We can stick to the supplier side itself, right? So see, luckily today, even SIDBI and government together, have created this credit guarantee scheme, which essentially is also helping you, purchase machines. So when you rightly said, when you start a business, the first thing that you need is a capex, right? And especially if you're more on the supply side or manufacturing side. Uh, the capex that needs today is at least available. So you may not be able to actually buy like four machines on day one because it also needs some amount of margin that you or the capital that you bring to the table as an MSME or as an entrepreneur, right? But since that machine that you are going to purchase itself becomes a collateral, there is a funding that's available towards it, right? So you
Okay.
can do that. But having said that, of course, the process in order to apply for it, etc., is a bit tedious. You'll have to have secure all the permissions, etc., that's needed for you to run that as a business. Uh, but with some amount of effort, you should be able to actually secure the funding that's needed. Of course, as I said, again, it has to depend on how much capital you are bringing to the table, right? Because it cannot be 100% funded, and
Okay.
so those things plus a lot of times your tenure in the business itself comes into picture. So for a first-time entrepreneur, there would be restrictions or limit on towards which the funding is sort of provided, right? Uh, but on the capex side, I think with right assessment and machine itself or equipment itself being a collateral, the funding should be available. Having said that, now the next challenge that comes for, and I'm assuming when you're a new first time entrepreneur and doing so, you are typically a micro or a small enterprise, and that is where your working capital uh, requirements, there is going to be a problem. That is the problem that is sort of we have figured is yet to be solved. Okay.
Okay.
Because this gap, now you have a machine, you have an equipment in place. So you're essentially you have a term loan, which has got a structured installments to be paid every month, right? But unless you are able to run the machine and utilize that capacity that's created, okay, which needs you to purchase raw material and then actually process that to create a final good and then sell it. If you don't have a working capital available, that's going to be a problem, right?
Hmm.
And essentially, that is the problem that is what we are trying to solve. That we realize that a lot of these micro and small manufacturers today, they have the capacity that's installed. The capacity is installed by purchasing machines, purchasing equipments. A large capex is done, right? But today, the lack of this working capital, is restricting their capacity utilization. So a lot of places we have found that the capacity utilization today is max 35-40%, right? So
Hmm.
this creates more problems for them because they have a fixed installments to or EMIs to pay because of the capex that they have done. But enough funding towards working capital is not available,
Hmm.
and thus they are not able to do more business. And then since there is less business, you essentially are sort of not generating enough funds, right? And that is where they also then these MSMEs then they go and rely largely on also try and rely on informal credit that's available, which is at very high cost, right? Then it starts eating into the margin, right? So it becomes a sort of a vicious cycle, and that is where we as QistonPe are trying to
Hmm.
solve the problem by ensuring that a working capital for small and micro and small manufacturers is available at a reasonable cost, so they are able to purchase raw material, increase their capacity utilization, do more business, and essentially then grow to an extent where we are able to further reduce the cost of credit to them.
Okay. So that means for the machines which I have to purchase, so the majority percentage of it I will be able to get. Then I will reach out to your organization. So you will resolve my challenges in terms of working capital, primarily for raw materials and the areas you mentioned.
Yeah.
So approximately, is it right to assume that to run the business smoothly, I my 70-80% of the credit requirement will get fulfilled if I involve the bank or the formal channel and your organization. Is that right to assume? Uh,
Yeah,
okay.
I think you're right there. So what happens is, having said that, I mean, now a lot depends on what sort of an equipment, what kind of a business you have, and see what happens is some of these credit still because a lot of this also relies on uh, uh, how much of a business vintage you have. So initial years, it's not very easily that will be available because even as an organization, when we come in, uh, we have to see some data that there
Hmm.
is a purchase and there is a sales that is happening. So you're able actually you have the expertise that's for required for you to run this business, right?
Hmm.
So unless that is kind of established, that becomes a little challenge initially. Having said that, we are trying to understand the whether the manufacturer has enough order book which is verifiable.
Okay.
They have enough data using which we have established that there's expertise that they bring to the table and thus are able to sell the produce that they have to a large OEM. With that in mind, we'll be able to solve this as a problem.
Okay. So the point which you just clarified, the order book and the related thing,
Hmm.
um, is it the top challenge? One of the like, should I rate this as a top challenge for you currently, which you are trying to solve, not solve, but facing when you are selling your product or trying to resolve the issues of a person like me who wants to start the business?
So. Maninder, this actually ties back to when even when we started and we tried to explain certain current models that are available in the market from a supply chain perspective. And anchor-led supply chain finance model has been a very, very prevalent model that a lot of fintechs have adopted so far, right? But are they able to actually solve for micro and small,
Mm,
especially towards the supply side? I think that has not, because what happens is when you start with a large OEM, okay, the large brand or an OEM do not really have visibility of the entire supply chain. That who are the deep tier manufacturers who are actually procuring and then supplying it to an immediate manufacturer that we have, and then essentially it comes to us, right? So they do not have that visibility. So you're if you largely see on a deep tier side,
mm,
deep tier manufacturing side, the funding, the anchor-led supply chain programs haven't really been so far very, very successful. That's why there is a huge gap that exists, right? But then what is the other way to reach out to them, right? Which is obviously one to create the distribution in where at the remote or at a rural or semi-urban areas, these manufacturers are concentrated like industry clusters. Right?
mm.
But once you reach out to them, how do you first really understand that there is an enough order book that these guys have?
Okay.
Secondly, how do you establish that what are the right risk and mechanism controls that will ensure that you are able to actually track the progress of the project that they are undertaking, and then you are able to also look at the collections. Now, this whole thing needs a lot of tech embedded into it, right? And that is where you will also be, an organization like us will also be able to get the lending partners as fintech. So, like, we will have to partner with the banks and NBFCs, and uh, unless you are able to solve end to end, right, from onboarding the customer, doing one-time risk assessment, and doing continuous monitoring of how they are utilizing the funds and ensuring that the funds also come back, right? That end-to-end platform is something that what we have built. Uh, but as you rightly said, the first challenge has been where to reach out, and that's where we are trying to solve this now. And
Right.
also creating and understanding about the this different kind of finance to these manufacturers, and then ensuring that they understand how that can help them to grow their business. Okay, and also to lenders, from a lending perspective, to the lenders that a perceived risk that they had towards this segment, how a particular product that's created, which has got a right risk and monitoring controls in place
Mm.
so that the risk is limited, and then ensuring that they're able to create a lending program with us. I think these are some of the key challenges that we are trying to solve today.
Okay. No, no, that explains in a summarized manner also, like which areas which where still the work is happening, and for anyone
Yeah,
who wants to start the business, he or she should be aware about, so that the preparation can be done accordingly, that this much will be solved immediately and this is where I
absolutely.
need to focus so that I can set up my business and run it. No, no, fantastic, Sandeep. Thanks a lot. I think very engaging conversation. I hope the audience will learn a lot from today's discussion. Thank you. Thanks a lot, Sandeep. Thank
Thank you so much, Maninder, for having me here. It's been great interacting with you. Yeah.
you. Thank you. Thank you.